Good morning all. Just remember that we've got the Black Friday special at fxsi.com/plans. So remember to put in the Quasidb code for a $10 discount. And it's a sizable discount, to be honest with you, for a lifetime. It's quite amazing. And you get the FXSI Pro Pack, which I've covered a lot in YouTube. And so, there's lots of information here. There's the terms of deal. So click that. And these are the stuff that you get. So, you've got your order book, you've got the stop loss clusters, you've got your ratios, profit ratios, loads and loads of awesome stuff. And I can help you understand how to use these as well. Some of them are quite self-explanatory, like the stop loss clusters. That's where you're going to target. If you've got the bias to buy using the sentiment, you target the SLC. It's not rocket science at all. It's very simple. If you want me to help you with the other indicators, that's fine. I don't mind at all. The order book is basically current positions and then orders to buy and sell or stop loss clusters. Normally what happens, retail traders don't place orders, they just enter at market. So when we see the orders here on the left hand side, that's where they're going to get stopped out. Okay, so that's where the liquidity targets are. So these are the stop loss clusters, okay? And when something sticks out like a sore thumb, then that's where we're going to target, because that's where the retail guys have got their stops, okay? Doesn't necessarily mean stop loss clusters. It could be where they've got orders to enter, but normally retail guys don't use orders, they just enter at market, right? So they don't really have much patience and they get FOMO, so they enter at market, and then this is where they've got their stops. So you target those nodes, right? Very simple. And you've got a huge discount, so do get that. And then you can ask me if you've got questions, so I won't mind. So our risk calculation took a huge 24-hour difference, and now we're minus 13 SSI. So every one person buying risk, there's 13 people trying to short risk now. So it's getting a bit crazy, getting a bit skewed, but the VIX might even break below 20. Yeah, we might do that, mightn't we? If we break below 20, then it's going to be a proper extermination event of the bears. So note where the USD is. Okay, but that's worth noting, because in case you're trading dollar pairs, okay? And if you don't understand the bubble logic, let me know and I can tell you how to use the bubbles. It's very simple. So the yields all fell, so that indicates a soft USD, but the 3-month is being stubborn. And once that dips below, if we go negative, then I think it's going to probably be like a nail in the coffin on the dollar. And then, because we had a less aggressive Fed from the minutes, we had that data from the CPI, so it looks like we might have peaked on the inflation. So the macro theme on the USD is that we could be softening a little bit, medium, long term. So if the 3-month breaks down, then it's going to really help the bias for a weak USD. Okay, so that's how you use that. So it's really simple. The position over time is the key. Is the time is the important element and component to analysis. So we do need that 3-month down, and ideally these stay where they are, but these need to come down as well. So this is risk off. Now, if the retail guys suddenly all go long, if they all go long, then that's going to cause a bit of a risk-off event, because this is actually quite risk-off. If this retail sentiment changes, then it's not going to be. We're going to see quite a lot of ugly price action materialize, because I think the retail sentiment is buoyant the market, and we're actually ignoring the yield curve because of the retail sentiment. If the retail guys decide that they're going to go and buy the dip, buy this top, then we could get quite ugly quite soon, because this is fundamentally risk off. But I think this retail sentiment is buoying the market, it's keeping it afloat, because the retail guys are so short and their stops are above. So price is going to gravitate towards their stops. Like I said in that stop loss cluster video, the top of the video there, price is going to gravitate towards their stops. So there's where we are. The VIX is down more. We're down 0.36 now, and this was the video screenshot that I took 45 minutes ago. So the VIX is being crushed. So that would agree with the retail sentiment, but it doesn't agree with this. So it looks like the retail sentiment could be more powerful than the yield curve analysis. So we are onto a winner with the retail sentiment, I think. Now, they really shorted indices and they went long on USD. They sold France 40. They shorted pound USD. Note that we don't have a Scottish referendum case. Now the Supreme Court overruled it, so there's no worry about any more uncertainty with Scotland leaving the UK, which is good for the pound. They shorted DAX, they shorted Kiwi USD, they shorted S&P, FTSE, Dow. They went long on dollar Swiss, and they went long on oil. Be careful with oil; it's moving a crazy amount. It's like 5% moves every day, so be careful. Gold really didn't do much at all. It's hardly shifted. Okay, from last week. And so the dollar is losing a bit of strength. Don't forget, we had like a change in rhetoric from the Fed and a little bit of a change in the macro, the macro view of the USD as well. So I think there's going to be a lot of people caught off guard on the USD. It looks like it. They've gone long USD, but look how extreme it is, right? And if they continue, then they're going to get squished. Now, unfortunately, there are people on Twitter who are going to get squished. So I don't know whether or not to tell them, whether or not to send them a direct message or not, because it's really none of my business. But if I showed them the sentiment, then they'd realise that how powerful it was and that they were making mistakes, right? So maybe I might do that. I'm not sure. It's really none of my business, but I like to help people. And when I see them do something which is like really goes against the grain of the sentiment, I probably should say something, but I don't know. I might do it. I might do it next week, but I'm not sure. It's like I say, it's nothing to do with me really. But I don't like to see people incur large losses, and if they're not obeying sentiment, they'll incur large losses. So we've got a speculative trader day today, and it looks like we're going to probe the stop loss cluster below. Now, if they don't move their stops and they get stopped out, we will bounce at that level, and it'll be a good trade of the day. But note that it's speculative, so we're not going to include the profit and loss on the spreadsheet. We've had a really good week so far. Monday and Tuesday were fantastic. We've made over 100 pips. So not having a trade a day is fine because we're up on the week. And I want a positive week. Well, we want a positive week, don't we, really? And tomorrow, I'm not sure whether or not we'll have one. We'll probably have a trade a day tomorrow, but we might be like a hangover from the holiday. So we'll have to wait and see. Tiers. So, if you want to join Patreon, that's fine. You can join those. That's no worries. There's Telegram and Discord. There's the level 3912 for S&P, and we're holding above. They shorted it, so we're coming up. They shorted the S&P, like I say. They shorted it here, so we've been in buy for a while, and so they shorted it there. Up we come. US 30 is very crazy. Look where they shorted it. We've added hundreds and hundreds of pips since. You could probably argue we had a technical break there. And we are nearing 80% short. So there's a lot of people bearish this market, and they're probably going to get extinguished. So we have to be careful. If we get to a point where it's a big exodus, it's going to impact price. And that will tell us it was a stop hunt. And we know pretty much that things are just stop hunts. This is liquidity probes. And that's how it is. So one of the main reasons that this is going up because of this. Okay, the retail guys are shorting, so it's going up to punish them. So, there's Wall Street and there's Main Street. And Main Street are a big source of funds for Wall Street. Main Street have, got a lot of capital, and they're normally counter trend. And so they give great contrarian signals for Wall Street and the big fish, and for us as well, because we're looking at the retail sentiment. So I was just saying in Discord, I really hope that no one was caught selling these indices, because we knew they were buy ages and ages and ages ago. So hopefully, you were watching the sentiment. If you're a Quasidb subscriber and you ignored the analysis, then, I don't know what to say, really. I mean, I put these out every day, so hopefully you're taking note of them. Likewise with DAX, we were an absolute beast. And we could be making a risky sell here where they're going long, but we have to remember how skewed it is to upside because they're so bearish. So this could be a temporary little payday, and then they might even short it again. So we have to be careful with 20%. See, we're 22% there. If we go below 20%, then we've hit that Pareto principle with the 80-20% ratio. So we have to be careful. We are nearing extremes, but we're not as extreme as US 30. Gold is interesting. So what would normally happen, we see this flush out price action. This is designed to flush out the retail guys. There isn't any other reason for it. It's just to kick people out the market and to induce positions. So there could have been a lot of sell orders here that they just wanted to get. And so they absorbed those stops, induced those positions, and so we come up. But what's interesting is the FXCM, it didn't budge. So we'll have to look at gold, at the FX SSI level, because the FXCM, this analysis here, they didn't really do anything. So you'd think that action there would have caused a direct consequence on the sentiment, but it didn't really do much. It fell and they went long. So then they got paid. So I think they're hodling a little bit on gold recently, the FXCM guys. You could also argue we had a technical break as well. I mean, it's not the greatest trend line, to be honest with you. It's only hit it twice. I mean, you could probably argue there been better. I think that's probably a better level. We'd have hit it 3 times there. But, inevitably we've had a diagonal break. You could argue, so technically, they were all right. Those longs. So risky buy there, looming, with a question mark. Because we don't know what's going to happen until they've done it. So we have to look at the sentiment and see what they're doing. But unfortunately, fortunately for us, it's real time, so we can see. They are selling it, right? And then there's that price action. So that's that logic. See, there's a difference between the SSI and the moving average. 54.1, 54.36. The SSI is below the moving average. So there's a deviation between the two values. And this is why you've got to use a trading station. Look at those metrics. And that's your buy, because there's a deviation between the SSI and the moving average, okay? And so that's the risky buy looming. See that candle there, negative. That's a $4 move. And if you're positioned correctly, with the correct size to your account, $4 is quite a nice return. And then, you could even potentially exit, and then you're done for the day just by using one little setup here. And so that risky buy looming question mark wasn't a question mark. It was a risky buy. So that's that. Liquidity targets, quite a lot of movement. Aussie USD was the largest mover and also the largest stock loss cluster below. And we'll look at the SLCs closely for the Patreon video. So we'll just talk about that when we get there. And Aussie is currently, Euro is paying the retail guys. They shorted it and price is going down. So it should be going up. The price should be going up. So we can check that actually. Euro still poor score. Still got a poor score. So we should see Euro perform better because they shorted it. And price should be going up. So that's the logic. Okay, so look for a rebound in the Euro using that logic. And we'll go back here again. And then we'll just wrap up the video. No trade of the day because we had the Fed minutes. Today's trade of the day is speculative, so we're not going to take into account the profit or loss. It should be a good trade, and it looks like we're going to a stop loss cluster hunt, then bounce on that particular trade of the day. Today's trade of the day. QDP signals, so we are aligning technically and sentimentally. Fundamentally, you'd have to probably look at other things. Look at those Fed minutes. What did that tell you? A weakening on the USD potentially. You have to be careful about your risk management, your money management, and your entry. And you've got a system there. Very powerful system. Economic calendar, quiet 48 hours, which is fantastic. Now, because today's Thanksgiving, I'm taking it easy, and I'm going to be watching the football all day. And I'm just going to sit on my hands, I think, and we can look at some trade setups tomorrow, potentially, and definitely Monday. So have a great day, and I'll speak to you guys soon.